Morning, Steve Freed in Chicago with the morning grain comments. Well, today is the last day of trading in the month of January, and certainly people are going to look back at the month of January from a commodity perspective as a negative month. We certainly took energy prices down, wheat's down 80 cents, corn a little over soybeans a little over 50 cents, and corn almost 25 cents. And so as we look ahead to the month of February, we're going to be watching the South American harvest of the bean crop, farmers selling and their export pace. We're also going to be looking later in the month with the February USD Annual Outlook Conference. It's the first time they give us 2015 and 16 supply and demand numbers. And most people are looking for, if they change the acres, what kind of yields they're going to put on and what kind of demand they're going to put on and what kind of carryout that leaves. Most people look for them to raise the wheat carryout, the bean carryout, but could lower the corn carryout. Interesting thing, since these numbers were probably put together, we are hearing a little bit more about the fact that farmers may not drop their corn acres as much as they thought earlier. So these numbers might be off a little bit, especially on final corn acres. February is also a month in which we establish the revenue payments for farmers here in crop insurance. And I'm sure farmers would like to see prices higher than they are now. Anyway, this is an important month for U.S. farmers. We're going to be getting GDP data in a few minutes, expecting GDP in the United States to be around 3.2% versus 5% the last quarter. That could have a big action on the U.S. dollar. It could have big action on interest rates. It could have a big action on the U.S. stock market. It kind of feels that our economy is doing better than that, but we'll see what the data says. Over the weekend, we'll also get China PMI manufacturing data. It's supposed to be around the 50% area, and that continues to suggest their economy is kind of moving along and at a maybe steady pace, but not really improving as much as some people think. We also noted yesterday that we got the drought monitor index for the U.S. There's some pockets of dryness in the northern plains and the southern plains and a little bit of area around western Illinois and eastern Iowa. In talking to our weather guy yesterday, he was saying that he feels that there will be some dryness this summer across the northern plains and Canada prairies. We'll also be watching the northern China plains. But he thinks the rest of the Midwest will be okay. We did have one year in 1988 in which some of that dryness in the northern plains leaked into the Midwest, especially like Minnesota, Iowa, and Nebraska. We are having a few brokers in Nebraska talk about how dry it is and how warm it's been, and so we're not going to necessarily go through this 2015 campaign with quote-unquote perfect weather. So we'll have to kind of watch that dryness in the northern plains to see how it impacts the wheat up there, and if that leaks into the Midwest later this summer. So a little bit of hope for some better prices. Right now, we're sitting at some pretty important levels as far as wheat, corn, and beans are concerned. So technically, we need to hold these price levels, or we may take another leg lower. Crude oil is also trying to stabilize here, and we'll see if that helps the commodity markets. So in general, mixed trade overnight, low volume, a little bit higher led by wheat. We'll look at the US GDP data, and then we'll kind of see how we move into the month of February. As always, these are my thoughts and not those of ADM or ADM Investor Services. And have a safe and profitable trading day.